Hey everybody, it's Pete. Welcome for joining me today. I really appreciate it. Today we're actually going to talk about a different type of topic that can literally transform you into a unprofitable trader, maybe even a frustrated, angry trader, into somebody who really has a grip and control over what it takes to be profitable. So we're actually going to work our way into this question that we had in a recent coaching call, which was actually just last night. And it was a question from a trader about improving his risk tolerance. And once we dove a little bit deeper into the question, we found out, we dug deeper, we actually discovered that it's not really the right question. And here's why. Because when you have some experience, you start to listen and understand what people are talking about and what the real problem is. He thinks that the problem is improving his risk tolerance, when really what the problem is he's trading emotionally and he is not accepting the risk. And you can see here, hates losing money on a trade. And I think hate is the big part here. So literally in his own terminology, putting into that. Now, look, nobody likes losing money, but hating to lose money blinds you to the point where you're not really paying attention to the whole point of how to be a profitable trader in the first place. And what's ironic here is that he's saying the right things. He's saying all the right quotes and all that kind of stuff. He's 100% willing to take a loss. And we're actually going to see that he's not 100% willing to take a loss. Because as we dive deeper into the scenario here, we can see what the risk was on the trade and what the risk was that he actually took on the trade. So in other words, what was a reasonable loss on an earnings play that didn't work out became a much, much wider loss because he was not 100% willing to take the loss, and he's trading emotionally, hates losing money. Frustration level at trading. Okay, we're going to dive deeper into all of this and how this can instantly help you personally become a much, much better trader simply by understanding some basic stuff about when you buy stocks and a risk management perspective. We're also going to blow the roof off of the fallacy of win-loss ratio today too. So the big thing with traders, the big thing with winning traders. So before we even get to this, I'm going to ask you a question. Raise your hand if you've ever moved a stop loss just as it was about to get stopped out. I think everybody has done that at some point in their career. And essentially what that means is you didn't accept the risk before the trade. You took risk, but you didn't accept the risk. And the reason I say that is if you accept the dollar amount, you accept the risk on a trade. If the stock moves down and goes down to your stop loss, you're like, bam, I'm out of that trade because that's okay. I accepted the risk prior to putting on the trade because I thought I could make what I needed to earn on that in order to accept the risk on the trade. So this is critically, critically important. It sounds the same, but we are talking about taking risk versus accepting risk. When you take risk, you put the trade on and you never expect it to move against you. And how do you know when that happens? You're emotional, you're trading, right? You're trading with emotion. You hate losing money. You start to talk about your frustration level. There is no frustration in a losing trade. Frustration comes from expecting that you're never going to have a losing trade. So professional traders have a dollar amount that they say, oh, okay, I'm okay with risking that amount because I believe over time I could make more on my winning trades. So what does that mean? What exactly does that mean? We're going to use a simple example here of a dollar amount based on a percentage of your trading account. Now I'm going to use $10,000 here. You can, it could be $1,000, it could be $10,000, it could be $100,000. It doesn't make a difference. $10,000, 2% is typically the number that most people use starting out to accept risk. So what this essentially means is, let's say you have $10,000 to allocate to an idea, and you're okay with risking 2% of that $10,000 on the next position. That means you're willing to risk $200 on the next position. Now, here's where this becomes critically important to getting successful instantly, because you're going to be eliminating all of those big losses. And I'm actually going to put eliminating, I can't even spell, eliminating big losses. So that's what this does. This eliminates big losses for you. Now, it sounds small, but it's huge, okay? remember we just talked about here about taking risk. Remember we just talked here about this trader who took a much bigger loss and accepted $4 risk and turned that into $8 or $12 risk, a much bigger loss. So he took risk but didn't accept it. If he went into that position saying, okay, absolutely, I'm okay with risking $200 on this idea because of the argument that we built for the good idea. Now he's immediately getting rid of those bigger losses and, more importantly, flawlessly trading, because the loss is not a big deal. It's a part of the process. Now, how do you mentally handle that? How do you mentally get to the point where you're like, oh, okay, all right, I understand that. Here's what we teach traders. Successful traders see trading losses as a business expense. It's not an assault to your ego. It doesn't, quite frankly, it doesn't even mean that your strategy doesn't work. It just means that that one position, that one entry didn't follow through. I can't stress this enough, and I really hope you take screenshots of this stuff because it's that important. A trading loss is not good or bad. It's simply your edge doing the work over time. And we're going to poke a hole in the whole win-loss percentage thing in a second. So you get to the point where if you move your stop loss, you have not accepted the risk. You have not accepted the dollar amount on that trade. You took risk, but here's the key. You never expected it to move against you. And how do you know that you're in that mindset? You get frustrated. That's how. Professional traders don't like losing money. Nobody likes losing money. But we don't get frustrated. It's nothing more than running the business and a dollar amount that we accept on the position, okay? If you did accept it, you would never have moved the stop loss. So now we're going to work on, okay, that's great. I understand how to take a loss like a professional. I understand how to accept the dollar amount. And by the way, this 2% could be 1%, it could be 0.5%, it could be 5%. It's different for everybody. It's different based on risk tolerance. It's different based on your ability to make money. It's different based on your skill level. It's based on your education. It's based on the quality of the idea. And I really believe something that is massively important. Real risk is the quality of the idea. Okay, real risk in the trade is the quality of the idea, which means that you built a great argument for the idea. So now we're going to talk about how to do this flawlessly. Let's just say, for argument's sake, you have a 50-50 win-loss ratio. Okay? Because everybody's like, oh gosh, I hate losing money. I don't want to lose money. This is what separates the winners from the losers from trading. This is where risk management becomes the keys to the kingdom. This is where you really understand that you don't need to know what's going to happen next. You need to know what's probably going to happen next. And that's what separates somebody. So this means that you have 5 wins and 5 losses. Okay? We've also just talked about accepting risk. We're okay with that now. It's a business expense. It's not that big of a deal. So what we're going to talk about now is 3-to-1 risk-reward ratio. Okay? Risk-reward ratio is something that everybody knows, and most struggling traders mess up risk-reward. I spelled that wrong. They risk $1 to make $1. That's bad math. That's not going to work. So what we need to do is we need to risk $1 and make 3 on the winners. So let's do the math here. Let's assume that we're talking about $100 here and $300 here. And we're only going to talk about a 50% win-loss ratio. The whole reason I'm doing this is because you need to understand that the sooner you understand this basic trading math and accept the fact that, okay, I'm good with that, the only thing left to do is to understand how to make 3 against the 1 that you're willing to accept as a business expense. So what we do is called order flow, and that's the biggest thing. It means following the smart money, okay? When you follow the smart money, you are literally just piggybacking on how they're pushing stocks up and down, okay? Order flow equals why stocks go up and down, okay? Once you understand order flow, once you understand how to track the big money, it gets easier to consistently make the 3. You're building arguments for great ideas. So if we have 5 wins that equal $300, that equals $1,500 on your wins. If we have 5 losses, that equal $100. So remember, this is 3-to-1 and only a 50-50 win-loss percentage. There's much higher win percentages if you really understand how to track the order flow. That equals $500. And that equals profits of $1,000. Now, here's the key that I want to get across. When you understand trading, when you flawlessly get to a different level in your trading, you accept a dollar amount based on everything we just discussed. In that particular case, you are now looking at a $200 risk, which would mean that on this trade, you would need to earn $600 for a 3-to-1 risk reward ratio. The real risk in the trade is the quality of the idea. So the better ideas you understand how to calculate, understand how to find, understand how to spot, which the way that we do it is order flow, the better ideas, accepting risk becomes infinitely easier because you understand how to make money. So the real risk on the trade is the quality of the idea and the repeatability of your skill level to make 3 for every 1 that you risk. Okay? You're also eliminating the big losses. You're also eliminating, and I think this is probably even more important, you're eliminating the frustration level. You're eliminating the fact that you hate losing money because it's not a big deal. No, look, nobody likes losing money, but when you see your losses as a business expense, when you see your trading as win-losses in the context of how much you make versus how much you earn, if you see your trading in the context of understanding that if you manage the downside on your trading flawlessly, and then you learn how to make more on your winners, that's where trading becomes fun. And that is really where I hope I can help you get to. I hope this helped. If you have any questions about this, leave a comment below. I would absolutely love to hear from you.